My view is that services inflation is the most persistent and sticky part of inflation. A lot of my view about services inflation is driven by the housing sector, as shelter costs are the largest cost for most families. My view about shelter inflation, as I said, is driven by two things, as I said in the speech. One, the fact that average rents have finally caught up to market rents, meaning the catch-up period is done. People don't reset their leases every day. They reset every year, every couple of years. And so that means that a change in market rents takes time to feed through to when it's experienced by households. When you look at the data, it seems to me that that catch-up period is done, which means that I expect shelter rents to come down. CPI rents to come down, bringing shelter inflation down. The second thing is the immigration shock that we talked about. My view is that immigration was pushing rents up in previous years, and now that shock has not only gone to zero, I think it's actually reversed. I think we have negative net migration when it comes to the United States this year, right? So my view is driven by two things. Services are the more persistent and sticky part of inflation. Services are driven in large part by housing, and I expect housing inflation to come down through those channels. If something were to happen that were to tell me that that channel is invalidated, that there's some shock that's going to be pushing rents materially higher, the benign inflation forecast that I have would have to be adjusted as a result. All else equal, right? If nothing else were to change to offset that. But to me, that's the core of my inflation view. And I would want to see something come along and tell me that that channel is wrong and that I'm thinking about it the wrong way.